and welcome back to a brand new video by Vertex Investing. Now, in this video, I was actually sent a trade actually, and this trade actually came with a good message. So this is a Kiwi dollar long, and this person, they sent me a message. Actually, I don't want to show it; it shows the name. But the message said they just did a back test and they hit 47.5 R, and they thought we were joking about the strategy, and it turns out obviously that's what they needed to do, was backtest it to see the full proof that it actually works. So I'm going to show you another way. I'm going to try to break down this trade, but I'm going to break down the trade that I've taught it on this free with our free content, and we'll go from there. So in terms of Kiwi dollar, in terms of this, so if we look at the daily, where we can consider going long. So this is something that I think can be a little overlooked, right? So we can see that we made this high, right? And we can see that the order block that created that high was down here, right? So at this point, where's my replay tool? There it is. So at this point where we're looking at price in this situation, everything is really in our favor. Like in terms of momentum, like from here to here, it took what, six candles and to come back. It's already taken 7 candles to come down. So we know it's coming down slower. But this is what is going to confuse people. So we had this impulse, right? Broke structure. There isn't really any imbalance for price to even come to here, which is fine. But we have a pullback and then another break of structure. So this ideally is the change in trend, right? This is where we should be looking for. Sorry, wrong one. This is where we should be looking for longs, not here, right? However, if we go down to the 4 hour where we actually will refine that, we can see that yes, we can look for buys here, and you may have got an entry and got taken out of break even, right? For example. Now that it's done that, remember to confirm a change in trend. What do we need? Okay, because that was the low, that was the high. We broke this structural low only here, right? So now what we need is to have to confirm if price is going to change in trend. What we need is for price to come and do this. It needs to break the structure that the low that it's going to create, that is about to create, right? Because it's not confirmation that price is going to change in trend until that occurs, because this was the low, right? Price is now breaking this low, and it could just grab liquidity and continue going. If you see it on the daily, for example, that was a low. Price can just grab liquidity and go. Yeah, so we know to confirm. I don't know why I did that actually. Sorry. Yeah, so we know that like to confirm if price is going to change in trend, what we need is a break of structure, which we have. That's number one. And then we need to have another break to confirm that price is going to be bearish, right? Simple as that. Does that mean that we can't trade counter trend? No, because in theory, we're not trading counter trend here, but what we can see is a clear order block which broke structure. Now, remember when you think about order blocks, yes, they need to be eventually violated or mitigated, right? Either one of those is going to happen, and we don't know which one it's going to be, right? Until we wait for that lower time frame refinement to actually decide what's going to happen. Now, remember what we need to think about is they are reference points. So say, for example, price didn't come back here. This is a future reference point. So although even if it respects it or not, price will do something to it. It's a future reference point. We've got imbalance as well that needs to be corrected. Now that we know that price has broke this structure, right? We know that price needs to come back and continue to the downside should it change in trend. But we can still take a long from this point of interest purely because it's a valid point of interest. Price broke structure impulsively from here, leaving imbalance, right? We can still take a trade off that. So if you wanted to, you can actually, obviously you can just do this. You can look into that, into this, you refine it. Let's go to the 5 minute, which we've done now. Try find what's not been mitigated within that. So this has not been mitigated and it's broken structure. We can place an order there should we wish, right? You can place an order at that point. Let's let price play on. Right, let it come down. So it would have just missed, okay, if you went for that, which is fair enough. Alternatively, you could have just waited for the change in trend. Now the change in trend, essentially, if we go to this point, let's see what is happening. Let's go to the 1 minute and follow this. So if we go to the 1 minute, what can we see? So this is the interesting part, right? Actually, is this clearer? What's cleaner? Yeah, this is cleaner price action. So what we can see is, although price is just coming close to our actual OB where we could have entered off as a risk entry, we can still follow price action, right? So we created this low, and that's now broken structure, and it's broken this high, this previous high. So that's number one. Now what we need is a failed structure, then a break, okay? Just to confirm that price is going to change in trend. The breaker structure now finally happened, right? So where did that breaker structure come from? It came from this. So what you can do is, now that you found this, right, you can simply refine that. So we're on the 5 minute, so we can refine this wick. Yeah, so we can refine the OB that's sitting here, which is there. Right, remember to cover the following wick. Let's just go 30-second, I think it was. Yeah, so we can place an order at this 30-second OB should we wish. Actually, can we go 15 seconds? Yeah, there we go. So we can use that as well. There we go. So that's the OB, and that's where we're going to look to place an order from. And we've got all the confluence that price is now shifted in market structure. So we've got a full reason to take this trade, right? There's no reason why we can't. So now that we've done that, we can actually just place the long from here, from this point. Now my minimum stop loss is 2 pips, which is there. And then obviously we can continue up there. So now that we'll see what happens. Okay, so we triggered. Now this is the interesting part, right? Because if you think about it from this perspective, what is happening is, yes, it's wicked below. So depending on how tight you have your stop loss, if you do put it that tight, that's 0.6 pips, where you wouldn't really do that in terms of spread. I don't know any broker that will actually allow that, to be honest. Some people place like 0.5 pip spread, 0.5 pip stop losses, and I really don't understand how that actually works, because I don't know any broker that will allow it. You know, I don't fully believe that. For me, 2 pips is my minimum, and you know, I would have been fine in that sense. Yes, it did wick below, but for me, that could just be a liquidity grab and can continue. So that was a clear entry right at this point. Now, what you need to think about when this happens. So yes, we broke this structure, and we're querying at this point. So we're questioning whether price is either going to grab liquidity and going to continue to the upside, whether it's going to go all the way up to here and further, or is price going to come back to this POI, which is here? Because if you think about it from a daily perspective, right, the daily order block which broke structure is here, right? So in theory, where if we go to the 4 hour, refine it, that is where we should expect price to come to and react. So at this point, we got a reference point of where we think price is going to react from, because that is the one that broke the structure of the daily, right? So yes, we're taking a counter trend at this point, where it's questionable counter trend, because it can just be a liquidity grab. So make sure you're aware as to what is happening. So yes, let's see what happens, and price starts to react at this point. So you could potentially take partials here, or to close the whole trade should you wish. If you did, I think that would have been what, a 57R, which is solid from that move, right? And then you probably could have looked for a sell, and to confirm that, you can obviously look for the structure shift to happen on the lower time frame, which is exactly the same thing coming back. Oops, I did not mean to do that. So if we look at it from this perspective, we can see that is there a structure shift? well, there clearly is, but you know, we'll see what we see as clear. So we broke structure, price didn't come back to this OB, which is fine. Then you know what, let me get rid of that long, but we can follow it. You know what, instead, if you don't see it on that time frame, you can go to another time frame and see what you find. Yeah, so we broke this structure here. Could have got an entry here, but price didn't come back, or did it? I don't know. No, instead we carried on going low, high, break a structure, from this. That was the OB. We could have got an entry there, and I don't know whether price would have come back, and no, it carried on. So you're following from range to range, and what I mean by range to range is, for example, now that we've broken structure, right? So you broke this structure, created this range. Okay, so that's your trading range, and then that's your trading range from there to there, right? Actually, it's probably easier using lines. Yeah, so that's your trading range from there, from that high, right, to this. Come on, that high to this low. Then we broke structure again, created this low. So your trading range is then going to be that, and your entry point is going to be there. Price didn't come. Fair enough. Now that you create another low, and you've done that, but now we create another low because price didn't even come back, you just carry on breaking. That's still the high, and that's an entry point there. Perfect within the premium, within the premium pricing, because if you think about it, 50% of the retracement is gone above, and we can easily find an entry point there. Even then, you can still refine that. You can still refine this OB to this point where you get the 1 minute. We get the 1 minute. Come on, mate. There you go. You go 2 minute, 1 minute. Okay, and you can refine that even further. Does price react there? Christ, nah, maybe not. So it probably wouldn't react if you refined it to that much. Where did it react off? It reacted there. I don't know what that reacted to. Let's find an OB that react. There you go. So you could have, yeah. So if you refined it to this one, yeah, fair enough. You could have got that. If you use the 5 minute itself, I think you would have had a really good risk to reward anyway. That would have given you a 4 pip stop, which is fine. Or you could 50% of that, so you can have 2 pip stop. But you know, it's just showing you, just literally following the range, following the money, as I say. So you made another low, created this. Break a structure, price actually reacted off here. For me, I wouldn't use that, but some people do. I don't really like that. But then we create another range, and you can follow it on. So now that high is here, and in fact we want price to probably react off there. I don't know if it comes back. No, it doesn't, which is perfectly fine. We can create another low, which is that one. The high that was made is here. We have a reaction at this OB, then we break it, and we'll be at break even at this point. We'll probably be taken out here, which is fine. Yeah. So essentially, you just follow the range, right? Ideally, you wouldn't want to follow it this far down, because if you think about it in this perspective, for example, you're in this 4 hour range, right? So you're in this range of the 4 hour bearishly, or even the daily, right? You're in this range. You don't want to be selling past the 50% mark. So yeah, once price comes below here, you probably wouldn't want to be looking for sales then. Even around here, you probably wouldn't. So you know, even if you miss the first few entries here, then leave it. Once it starts approaching the 50%, then don't worry, you've missed the trade. That's fine. You can just carry on and wait for the next opportunity. But that's one thing to think about, is whether you go in counter or pro trend, you still need to have questions in your head what is actually happening, because remember, you need to confirm whether price is actually changing a trend or not, or whether it's just a liquidity grab. We don't know at the moment. We don't know at the moment what is happening. If it breaks the structure, then yes, it's a bearish trend. Well, a continuation of a start of a bearish trend, a confirmation. But that's essentially how you would approach it in that sense. But yeah, and that was a breakdown of Kiwi dollar. I hope that you've enjoyed the video, and again, give us a thumbs up, subscribe, drop us a message, whatever. Make sure you join our free Telegram group, so you don't miss out any of our free content. But for now, I will leave you be. We've just completed our day 1 of the bootcamp, and we do have the bootcamp for next month, for February as well. So if you want to start booking your place in now, then feel free to do so. Yeah, I think that's everything. But for now, I'll leave you guys be, and I hope that you all take care and trade safe.